Hi, I'm Alan Clarke, Portfolio Manager at Nico AM, and I'm going to talk about our outlook for 2024 for economies and for the key asset classes. As we look forward to next year, it does feel like we're at a key point in the transition out of the COVID era and into the new normal. Each of the last few years since the COVID pandemic began have been unique and remarkable, and while our base case for next year is for a gradually growing global economy with falling inflation, there are many factors that could change this course and put 2024 into that same unique bracket. In terms of the returns from the key asset classes, our base case is that investors can look forward to a more normal year with returns in line with long-term averages, so mid to high single-digit returns for both bonds and equities. Inflation has been one of the key drivers of asset prices and the wild swings in asset prices in recent years, and how it evolves is crucial to where we go from here. Most countries have seen inflation fall this year. This has been led by lower energy prices and goods prices falling, but we need to see that slowdown in prices extend to the services and rent sectors. And until we see that happen, we expect interest rates to remain higher than normal. This is good for savers, but tougher for those borrowing money. And these higher rates are a key reason why we see the global economy growing only gradually over the next 12 months. Each of the different countries and regions around the world are at different stages in terms of the economic cycle. The US has been strong, and Europe has done it tough with really high energy prices there. Emerging markets are actually doing quite well, and in China, a key market for New Zealand, there's been a welcome thawing in political tensions between them and the US, which is a positive for the global economy. The outlook for New Zealand sits somewhere in the middle of the pack. Like most countries, the government spending levels of recent years will be greatly reduced going forward, and this will flow through into the economy and into the labour market. The Kiwi dollar in the low 60s is good for the export sector. Tourism is finding its footing again, and some key soft commodity prices are holding up pretty well. The Reserve Bank of New Zealand is likely to keep interest rates higher for longer, even if it risks an economic slowdown. So overall, our expectations are not for the doom and gloom of a global recession, nor for a Goldilocks scenario of robust, strong economic growth. Somewhere in the middle. We expect there to be shocks along the way. Would encourage investors not to overreact or panic in the short term. As always, we'll try and keep our investors as informed as the economic landscape changes, and we wish you all a safe and relaxing holiday season. Thank you.